Okay, everyone, it looks like the market did gap up above that 1320 area that I was expecting, um, or I wasn't expecting, but I did mention that in yesterday's video that if it did gap up above that area, that'd be the only way it could get through that necktie of resistance. And it did do that, as you can pretty much clearly see right on the open. I know it shows a bar right there going up, but basically we gapped right above there, right on the open. I think the actual gap level was 1322.50 is about where we gapped above that down sloping trend line. Exactly like I said, it was a possibility. I thought the odds were low. I thought the tape was weaker, but I did put that out there for you guys to know. That's why I sit in cash, because I've been burnt too many times when I've seen this happen. So, it did go way above what I thought it was going to be, obviously, because once it gapped, it's obviously going to keep running. So it looks like we're back to an ABC move, A, B, and C. And so I do expect this to pop a little bit higher tomorrow morning. Do not know how high. What I think is going to happen is that the non-farm payroll reports is going to be good, and this will spark a little bit of a rally in the morning, and then it's a sellable rally. It should fall from there on out. Now, if the non-farm payroll report is bad, then it will dip down, and at that point, it should float higher the rest of the day. That's just the way that those statistics are on the non-farm payrolls. They just buy the dip. So we are looking like, we're going to go higher here still yet. And at this point, I do think that we're going to go up here and hit that fake print. And sometime next week is what I'm expecting. We do know that Lindsey Williams basically said March 11th is going to be the day of rage. So we could very well likely continue up higher, folks. This is not out of the cards. It's not out of the cards. So just keep that in mind. I know that that all the charts are looking overbought here. If we look here at the 60-minute chart, it is still pointing up. It has not showed any signs of turning over here as of yet. It is flat, basically up in overbought territory on the full stochastics. So, at any time, it could roll over. We don't know. What I like to see happen is it to pop higher on some good non-farm payroll reports, and maybe go make a double top, and maybe even pierce it quickly and hit that 135.14 print we had on the SPY, which is about 1350 or so. I'd love to see that tomorrow, then short it like hell. But I don't think that it's necessarily going to do that, but it's possible. If it's possible, basically my decision to go short or stay out of the market was based upon where we opened this morning. And clearly, once we opened above this 1320 at 1322.50 or something like that, I just sit it out. I'm not chasing the tape. I'm not going against Bernanke. I've been burnt too many times. So I know a lot of you are already short, setting it out, waiting it out. Maybe you're not in options and stuff, and that's fine. It is going to sell off. We are nearing the top. It might take, another week or two. I don't know. But it's coming. I don't see us going too much further. So that March 11th date is going to be a critical date, as Lindsey points out. Between now and then, though, yeah, we could go make another high. We can make it tomorrow. We could very well hit tomorrow. It's maybe a big gap up. I don't know. Or if the non-farm payroll reports is bad, maybe it gaps down. At that point, it's after it finishes selling off, you can expect it to cycle back up and rally back. So in this last C wave that we have here, it could do a 1, a 2, a 3, a 4, a 5. It could extend out in this C wave. We don't know, because we do know that we are looking overbought here on the 60-minute chart. No signs of rolling over yet. But we are looking overbought. You look at the 30-minute chart, and you can clearly see it's starting to curl over. So it could go down and continue down if the non-farm payroll reports are bad, and then it would cycle down and curl back up, put in 1, 2, 3 higher lows on the histogram towers, which would be a positive divergence, telling you that the market would go higher. So, the idea, what I'd like to see happen is I'd like to see it pop up in the morning with some, and maybe go up here like this and then roll over. So I'd love to see that, because that would set up a possibility of a nice, pretty down day on Friday. I don't expect it to be much, but it could be decent. It could be nice. We could have a negative day if we were to pop up here and put in a new high, and that would take us, obviously up there to, like I said, about 1350. If we did that, that'd be the shorting opportunity. I mean, I don't think that's going to happen, though. I think more likely they'll probably dip it down and rally it through the rest of the day, or it's hard to say. It could go either way. You look at the 15-minute chart, clearly it could continue down. As you can see right here, it's continuing down. Or it could curl right back up. This could curl right back up and pop up here and put in a lower histogram tower and put in a negative divergence on that, which would be, we'll pop higher here. Again, hit this double top, pierce it maybe within the first hour. That'd be wonderful. Be a great short. But I don't know if that's going to happen. If that was the case, I'd short it over the weekend. But right now, I'm just going to set it out, because I know that March 11th is a key date. Even though I knew that this period here, I'd said this on videos back, that was looking very bullish, that looked like we was going to roll, that basically all this chop, it was pointing up going into that day. So, I fully expected it to go up some. I thought it would go up to 1320 and hit it and fail, but I was not willing to go long. It just wasn't worth the gamble. So, because you just don't know. If you're wrong, you buy it at 1310 and you do options and you go up to 1320, then you bang on it and then you roll over. Well, you're kind of screwed, because you don't really benefit a lot with options that way. So, of course, that wasn't the case of what happened. It was just the opposite. It just jumped over that 1320 and continued going, which would have been a profitable options trade to go long. But I just won't go long with it like that. It's just not worth my time. I'm looking for a longer time period, several days of a move, not just a quick one-day move, because I don't know how long this is going to last. Right now, it's overbought on these time frames. Now, you look at the daily. Yes, it is curling back up. There's no question about it. It's curling back up, but it is still below 50. This is in bear territory here on the full stochastics. The slow stochastics is just approaching 50. So, even though it's curling back up, that does not mean that the bulls are in control. When this gets up here above 50, and especially above 80, then the bulls are in control again. Could that happen? Absolutely. Do I think it's going to happen? No, I don't. I think if we pop up, if we just close flat tomorrow, let's just say, for example, maybe they pop up and then sell off, put in a topping candle or something, or maybe they pop down and then they come back up, then this could put in a little bit higher low on the histogram towers and keep pointing up. And maybe it rolls up to next week. Maybe Monday, Tuesday, Wednesday, it starts to get a little bit positive, and then Friday, when that March 11th, when that day of rage happens, then look out. I mean, right now, oil continued to go up today, even though the market went up, which is really dampening the market and hurting the market. But yet, the gangsters still have control of this market right now. So I don't know how long they can keep manipulating it like this, but I think we're in a topping phase. This clearly looks like it's the same as this April-May area over here, and I think that's exactly what it is. I've said this numerous times. We're going to chop around, and possibly put in a slightly higher high than what is here, and then that would be your double top essentially, just slightly above it, and to trick all the bears, and then collapse. So this move and this move looks eerily similar to this move and this move, of course, and then it's off the charts right now what was there. I think Cobra had it here on his chart. Maybe not. Okay, well, I thought maybe he did, but okay, he does right here. So we had a down day here, and then up, maybe a pause day like tomorrow, a little bit down, Monday up, Tuesday of next week up again, Wednesday down, Thursday down. You know, of course, I don't think none of this is going to happen. I think that we're guessing at this. Bottom line is we're going to have a similar pattern to this. We already are. We already are having a similar pattern. You can see Cobra drew a line here on his chart right here, and we clearly broke this several times here. So we are putting in a topping pattern. So you can't go candle by candle like that, but you can get the general idea that this market is in a topping phase, and so it could put in another high, a higher high, 1350 area-ish. It could very well do, and then roll over. So, but it's coming. And if Lindsey is right about what he says with the day of rage, then we're going to have a huge sell-off. Those of you who are not trading anything but the SPY, should also consider going long haul, because we know that's going to happen. As for the dollar, I don't know. A lot of people were saying it's going to bounce. Ron Walker here, chart pattern guy, he's talking about the dollar looking to bounce, and I don't know. I really don't know about that situation. But to me, when I looked at the chart for that, it was forming an MA pattern, which is very bearish. So I think it's going to break that support, and I'm going to have to agree with Lindsey Williams on that. So when it breaks 75, it's going to fall through the bottom there and just completely collapse. And when it does that, I fully expect the market to follow it. Yeah, they have been trading inverse of each other for a while, but I don't think that's going to continue. I think that's going to change. At some point, the dollar collapsing is going to be bad for the market, and when the market realizes that the dollar keeps collapsing, it's not good for it, they'll tank the market too. So they're going to go in the same direction when that happens. I don't know when that happens. So anyway, for tomorrow, what I'm looking for, if the non-payroll reports come in good, then we should have a pop up. It's a shortable pop, at least for a day. I don't know about, next week, but at least for a day. If it comes in bad and they sell off in the morning, it's a buyable for a short-term pop up into the close. I wouldn't do either. The only thing I'd do is if it does pop up higher, I'd love to short it, because you never know what could happen on this Friday. It could be totally unexpected. They could hit some sell programs, and although it should technically close with if it pops up, it should close either slightly negative or slightly positive, kind of a spinning top kind of candle, because when you look at the daily here, you have, after big moves down, you see you had a sideways day like that, kind of a spinning top. Well, after a big move up, you'd expect the same thing. But, that's the big but. If tomorrow the sell programs kick in for some reason, if it pops up high and starts to sell back down as these charts roll over, it is very possible we can put in a very, very huge red candle. I'm going to tell you, chances of a crash now are tremendously diminished. Odds of it are very low. I don't think it's going to happen, but it's still a good place to go short, at least for a day, if it pops higher in the morning. That's it. So, other than that, gang, that's it. I will see you guys on the blog. Good luck, everyone.